What's up, everybody? We are here. We're live. We made it. We're about to be talking about the market in about 5 to 10 seconds. Let's let the beat build. Let's let you get logged on. If you're watching the replay, thanks for tuning in. Let us know in the comment section where you're tuning in from. And we'll be kicking it off in 1 second. You can even do like a little dance in your seat with me, you know? Should probably pop the comments up. There we go. Lawrence Davis in the building. Welcome to the party. Let us know where you're watching from. East Side Wood, welcome to the party. JD Gleck says it's there it is. Let's cut the music. JD Gleck says it's scary out there. I want to talk about that too. We won't be long today. We promise to be strong. Rick says great music. Thanks, Rick. JD is tuning in from DC. Welcome to the party. Welcome to the party. Naru is in the building. Welcome, Naru. Kyle Martin from Joliet, Illinois. Welcome to the party. Marshall says the market sucks. That's what the problem is. It's actually a very interesting market, and it sort of sucks, and we'll talk about that here in a second. Yeah, Naru know what's going on. Shorts and puts are killing it right now. Absolutely. Amir in Rochester Hills, welcome. I think that's Amir that used to be in that social group I used to be in from meetup.com. If that's you, Amir, good to see you, man. All right, cool. So let's get into it. Let's get into it. My man Charles is in the building. Welcome to the party. So let's get into it, guys. The market has been. Let's just pull it up. Let's talk about it. Let's go there. The market has been pretty kind of in this pullback, and if you put the moving averages on it, here's what I'm here to tell you. It's a good chance. Let me close this out and reopen it. All right, it's a good chance that the market, it's about there. I figured it would pull back to the 50-day moving average. About there, and maybe we'll get a bounce. So what does that mean in terms of the time frame? It means probably for the rest of this week, which is only one more day, you're probably going to see either a sell-off or an open lower with a hopeful that the market rebounds. The overall uptrend itself isn't broken. You know what I'm saying? The overall uptrend itself is not broken. However, it can feel like things are broken though, because the market or certain stocks, they aren't really moving up and they aren't really moving down. And you might be like, what do you mean they're not moving down? Some of my stocks are down. Well, if you really just look at the stocks, they're trending sideways. Let me give you an example for a second here. If you look at CRM, for example, it's not really moving up. It's not really moving down. You see what I'm saying? It was here, it was here. It's back here, it's back here. Now it's back here to this line. So it's not really moving up, but it's not really moving down. Nike was in the news this morning. For whatever reason, there's some things overseas happening. But if you really think about it, Nike didn't really move up, didn't really move down. Didn't really move up. Even with today's sell-off, it's kind of back down to roughly the same general area, right? And so what you're finding is if you own stocks you're not making money, you're not really losing money. I mean, your account is definitely fluctuating, right? It's up, it's down, but you're not really making any money, you're not really losing that much. However, if you own options, you might be getting killed right now. And here's the reason why. Options have time value baked into them, right? So you need something to happen by a specific date. And if it doesn't happen by a specific date, each day that it doesn't happen, you lose time on your option, all right? And so what's happening in the market is when you look at like Nike, for example, went up, down, up, back down, you pretty much lost an entire month. So if you own the option, if you follow like what we teach in our course, buying that support, even if you bought it at support, you still are somewhat losing right now because the time value of that piece after 30 days, it basically went nowhere. Does that make sense? I mean, look at it. If you bought at support down here, right, you buy it, well, it went up, came back down. And so from February to March, you lost 1 month, right? So that's killing you. And now we're kind of going into April, and then here we go again, right? It kind of sold right back off as we go into April. So what do we do with this time frame? Number one, if you have the strategies like we teach inside the course, this is a good time to do spreads. All right, where you're selling another option and you're bringing in some premium and somebody else is taking that ride with you. Someone else is losing time that you sold off to somebody else. So spreads are working right now. Second thing that's working right now is if you own the stock and then you're selling options against it, you're doing covered calls, that's working right now because you own the stock, you got unlimited time. So you don't necessarily have to worry about you don't necessarily have to worry about like expiration or anything like that because you can hold the stock forever, but the person you sold the option to, they are the ones that are at risk of saying like, I need this thing to move within a certain amount of time. Does that make sense? So those are two things that are working right now. And then from a short-term perspective, put options are working right now. So if you're selling at the top or if you're buying puts at the top, you're making a decent amount of money as these stocks trend on their way back down. So if you're selling puts, boom, the moment it gets back up here, the moment you see these type of candlesticks, the moment you see a little bit of selling, you're making pretty good money if you're jumping in and selling puts. Now, here's the it's not an issue, but the caveat with being able to sell puts is long term, the market goes up. So when you're buying options or you're buying stocks and you're able to hold it for the long term, you're going to do okay. The market doesn't fall as often as it goes higher, or should I say, big picture, the market goes higher, doesn't fall. However, when the market and stocks fall, they fall faster than they rise. You could take a stock 2-3 months to go $5 to $10. It could lose $5 to $10 in 1 or 2 or 3 days. And so what took 1 to 3 months to make up, it took 1 to 3 days to completely wipe out. So what happens is if you are familiar with buying put options and playing the downside, the caveat to it is you need to be available to do it. You need to be either at work, have your cell phone to be able to jump into a put and be able to close it out in 2 days. You have to actively manage that account. If you're a person that says, I don't like to look at it, I just buy, set it, forget it, don't think about it to retirement, then making money on the downside is not going to be for you, or it's not going to be a strategy that is working well for you if you don't have time to manage it. However, if you got time to manage it, it's a very good market for doing put options. So let's take a look at some of the comments. If you got stocks you want to look at, let's talk about it. I think the big picture is this pullback is giving us an opportunity to buy some stocks, buy some options longer term and get paid. So I think it's a really great time if you're a first-time trader, investor, if you're trying to learn, because you don't want to buy at the top. You want to buy on the pullback. You want to buy when things sell off a little bit so that you're not getting at the very highest price. Now that may sound counterintuitive, but the market is counterintuitive. Most people come in and buy when things keep moving higher. Well, take a look at Tesla if you came in with that theory. Let's take a look at the Tesla boys. Let's say you just said Tesla can only go higher, and you come in and you buy right up here at 880, right? Well, boom, you quickly realize that stocks don't always go higher. They can go lower. All right. That's the first thing that you realize. Second thing that you realize is that had you waited for the pullback, something you bought for 880, you could have gotten more shares or more options down here at 560, maybe buying the first day of the bounce, right? And so now when you come in, what your brain is going to tell you, your brain is going to say, your brain, unfortunately, this is how it works when you're an investor. Your brain is going to say, maybe I shouldn't buy Tesla right now because something's wrong with it. And that's what your brain's going to tell you. Like, why would I buy it? Something's wrong with it. Let's go back to the chart. You're going to be like, why would I buy Tesla? Something's wrong with it. I shouldn't be buying down here. In the market, that's actually the wrong way to think. Really, the right way to think is this is too high. I shouldn't be buying it because it may be overvalued. But what we do is we buy up here, then it sells off, and then we say, well, what's wrong with it? However, here's the ironic part. You want to know the ironic part? The ironic part is the whole time it was up at like 900 or 860 or whatever. What's the number one thing that most people said? Man, if Tesla could come, man, had I known what I know now, I would have bought Tesla at in the 500s, in the 600s. Man, it's too high for me to buy now. Well, there's two types of people. One person says, it's going to keep going higher, I'm going to buy, which that person will absolutely get crushed at some point when it pulls back. Then the second person says, man, if I knew what I knew then, I would have bought it at 600. Well, then when it pulls back to 600, that same person says, yeah, but what's wrong with it? Or they come with the classic, you know what I'm about to say next, right? How much lower can it go? Right? That's another classic saying, right? You're looking at the chart and you're like, up here, you was just hoping it goes lower, right? Then it goes lower. Down here, you're using the other H. You're like, how much lower can it go? Right? And so it's all kind of ridiculous. The big picture is the pullback is presenting a nice opportunity for us to put cash to work, for us to put options to work long term. So if you're brand new to the market, it's a great time to learn and get familiar. So once things bounce and start to turn around, you're ready to take advantage of the move higher. If you are a person that loves the volatility, we like volatility, we need volatility, it's a great time for put options and covered calls because you're selling that volatility to someone else or you're taking advantage of these big sell-offs and your put options are able to make money very, very quickly, almost day trader-like style. 1, 2, 3 days in and out, no time to get greedy because big picture, the market goes higher. So you don't want to hold it too long for when the market turns around and starts to go higher. That's the mistake that most people make. Long term, it goes higher. So you want to be long-term stocks, long-term leap options, stuff like that. Short term, it's selling off. So you want to be day trading in and out with potentially put options, which are some of the things we try to find inside of our elite program or inside the university. What are the trades that we should be looking at? What puts should we be looking at? What stocks should we be thinking about buying and selling options against? So let me pull up some of your comments, see what's going on, see what we can figure out together. Then we'll wrap up. We'll keep this live stream short and sweet. So let's see here. A lot of you comments. I'm trying to get down through here. So let's see. JD Gleck says, do you have faith in June, July calls, or do you think we'll recover or break even by then? So June and July is only like 2 to 3 months away. That's only one earnings quarter away. So when I say long term, I think 8 to 12 months or longer is what I would be looking at because you don't want that time to work against you, but you need time for stimulus, You need time for vaccine. You need time for people going back to work. You need time for all these things to work its way back through the economy. Right now, the biggest focus of the economy is this whole interest rates rising, right? So we need new good news, and we don't have any right now, right? The good news we had was there's a vaccine. Good news that we had is there's stimulus. What's next for good news? Everything else next is like there's inflation, there's higher interest rates, etc. So I think that's going to be the narrative for the next month or two, maybe. We'll see, until we start to get earnings, until we start to get new economic data that says, okay, inflation isn't as bad as we thought, or interest rates are, a non-issue, whatever the case may be. I'm just looking off to the side here, just looking at the streaming charts, and things are trying to rebound a little bit, but not really, not quite. So yeah, not quite. Let's see here. Carmel says I have Tesla. I have Tesla calls that expires April 16th with the 820 strike. What do you recommend? Exit or wait? So I try to stay away from recommendations, but I can tell you my thoughts on how I feel about that. So let's pull up the chart. If you're looking at Tesla and you have an 820 strike price, that means Tesla needs to be here. And that's probably not even the break even, because it depends on how much you actually paid for the option. And so April 16th is less than 30 days away. So you are expecting Tesla to move from 620 all the way up to at least 820. That's 200 points between now and April. And then it still needs to go higher to even break even. Oh, Sheridan, thank you so much. Boom, there it is. And let me put that on do not disturb. All right. Sheridan, my assistant, is helping us out with the live stream. She was like, we can't see your screen. So thank you for that. There's the screen. What I was drawing out here was saying that if you have an 820 option, you need Tesla to go from where it's at, 620, all the way up to 820. And you need to do it in less than 30 days. Is it possible? Sure. But the reality is it was more possible when we were kind of in this bullish run of the market. Now that we're in this, what we call, here's your pullback, and then more likely we're going to be in this sideways market for the next 30 days. It's a good chance that option is going to expire worthless. This would be a good time to sell an out of the money option against your option if you know how to do a spread and bring in some premium, if you're still going to just wait it out anyway. But if it was me, I would more than likely just cut my loss and look for my next trade, my next opportunity. So those are my thoughts, not a recommendation, just my thoughts. You take that information and you do what you need to do with it. Andre Hollins says, I've invested in Vanguard, does DES, and Don on my M Finance account. Did I make the right decisions, and do you recommend M Finance for new investors? So first thing, I try to stay away from the word recommend, okay? But what I would share with you is a good platform for new investors. I typically like new investors to start out on Webull. Now, all of these platforms have their own pros and cons, right? Robinhood has its own pros and cons, right? Some of the pros to Robinhood is you get a free stock for signing up. It's a mobile friendly platform. What are some of the cons? Delayed order placement. The server goes down often. They've been known for restricting you for trading certain stocks like GameStop and AMC, stuff like that. So every platform has its pros and cons. I don't use M1 Finance, so I'm not 100% sure how that platform works. But I believe, I'm not sure if M1 or is that Acorns? Acorns may be the one that takes your money that you don't spend, your leftover change, and round it up, and they invest for you. So I'm not sure about M1 Finance, but maybe I should download their app and check it out. But I really like Webull from the simple fact that it's mobile. It has a great mobile platform. It has a desktop platform, which you can see here, right? We also have some built-in charting tools. So if I click on trade, we're gonna have some built-in charting tools that I can use. I can pull up, CRM, or Tesla like we just did. I can go to the daily chart and I can use this. I got some videos on YouTube about it. You can check those out. In fact, I think I got like a where's my little tutorial button? I don't know. I can't find it, but there's a ton of tutorials that we have that you can check out and see, you know, how this platform works. But I think the most important thing is, as a new trader, you're going to get some free stock, which is also a good thing. You can visit the Brown Report /tools. We put together a tools page for you that you can check out all the tools that we use. I think it's up and live and running. So go check that out. But full disclosure, for my quote unquote, professional trading or my bigger money accounts, I use Charles Schwab. I like to use Charles Schwab. I don't use the Webull and the Robinhoods. I use the Webull and the Robinhoods for my short term, my day trading, my fun money, my testing money out type stuff. But for like my bigger account, when I'm doing these $100,000 trades and multiple six-figure trades, I'm usually doing that in my Charles Schwab or my Street Smart Central account, or I have a TD Ameritrade, an E-Trade account. Some of the bigger brokers I like for that stuff because of the tools, because of the live streaming quotes and different things like that. So hope that helps. Let's see. By the way, if you're just tuning in, I'd love to know, where you're from. So let me know in the comments where you're checking in from. Marshall Williams says, I thought most institutional investors buy in March every year. I'm not seeing that at all. Secondly, I feel like this SPAC and altcoin movement is messing up the game. So nobody does anything all the time accurately. So when you say I thought most institutional investors buy in March, what you're probably really hearing, or a reason why you might be hearing that, is because in March we just had quadruple witching, right? So it's the end of a quarter. It's the end of the third Friday in March was the end of a quarter recently. It was the end of futures index, options index, stock futures, and then options expired all on the third Friday in March. So technically, that is the first big session where people have to reallocate their portfolio from the previous year, right? I mean, you had everything you had going into 2020. If you had some winners, you didn't necessarily want to sell them in December because you didn't want it to, get hit for being able to pay taxes for that year. So you delayed it to the following year. And then if you didn't have to close it out because the market was running, you were forced to make a decision with quadruple witching because your options expired or your index, your futures, all the things expired. So now you have to rebalance your portfolio and say, do I still want to be in these stocks? I don't care about taxes anymore because I'm forced to make a decision. And now what do I want to buy? So you may have seen more institutional investings because of those reasons in March, and they're buying something, or they could be waiting on the sidelines because we're having this pullback and they're waiting to see what are they going to go into next. And then big picture, when you think about this altcoin, you got Bitcoin. So you got money going different places now. People are doing Bitcoin. People are doing these non-fungible tokens. People are going into Bitcoin, non-fungible tokens, altcoins, Ethereum, just cryptocurrency as a whole is now you got SPACs, which we should do another video on. SPAC, which is special purpose acquisition companies, which are like these companies that are going public underneath other companies. Basically, it's like a public company writing a blank check to say they're going to buy a company. And the moment they buy that company, the new company is considered a new publicly traded company. So it's kind of like a cheat code for going public. We'll break that down in a whole nother video. But, so you got that whole thing going on as well, which is just, so money is going to so many different places that it's not all just focused on pretty much two primary markets, the stocks and the bond market anymore. Now money is kind of being split into fourths and fifths of all the different places that it can go. Not to mention real estate, has been on the rise lately. I'm sure that there's money just going into that area, or have been going into that area as well. So it's an interesting time, which then throws off how the total markets function with respect to how it previously functioned or how you thought it should function. Then you mix on the top stimulus, inflation, interest rates, and things just get a little bit unpredictable is probably the best word that we can use for that. By the way, we haven't put this up here in a while. If you ever have questions or want to reach out to myself or my team after the live streams, that's our direct number. It's our business number. It's not my personal cell phone, but it is my direct number where my team and I can respond to you directly. So if you got questions about our program, if you got questions about joining us, whatever the case may be, feel free to shoot us a text. If you got questions about your specific personal trades, we don't really try to coach through text or through email. We do that primarily in the back end of our platform inside of Power Trades University, where you can post your charts, you can post what you're looking for, what you need feedback on, different things like that. But that is our number if you want to text us, if you got questions. So reach out to us. Let's see here. Let's take a few more. Alfred said, first time tuning in, just learning about the details in stocks. Thank you. So welcome to the live stream. Alfred, Dreaded Mike is checking in. Says, good morning, everyone. He is from Cocoa, Florida. Man, a lot of Florida in here. Oh, no, that's Daytona, Ohio next. Marshall is in Daytona, Ohio. Says, good explanation. Thank you. Glad it helped. Jerry says, appreciate you and all your help, and thanks, Sheridan. Yes, Sheridan is helping us out. She is much appreciated for being here. So cool, guys. That's it for today. The market is, some of our stocks are trying to rebound. Most people know I own about 3,000 shares of Plug. You can see it gap down today. Oh no, you can't see. Had a nice gap down, but it's starting to recover today as well. Let's look at CRM. Had a gap down, trying to recover a little bit. Sunrun kind of not really recovering. They're kind of taking a beating right now. Let's take a look at like Apple. Beyond Meat trying to recover. AMD trying to recover. Let's take a look at Apple. Apple is actually up $1.50. So I think the takeaway is don't get too bearish on the market, ladies and gentlemen. The market, big picture or long term, it goes higher. All right. And so don't get so bearish on the market. Make sure you have enough time for things to turn around and for you to be right. If you're short term with put options or spreads, you'll make some money in the short term. But when you have a profit doing the short term stuff, make sure you take it. Don't get greedy. And I think you'll be okay. So I'm signing off saying you never go broke taking a profit. I'll see you guys on the next live stream.
Hey there, Jason Brown here, and thanks for watching my videos. I want to let you know about my premium group coaching program where my courses, coaching, and community is housed, which is inside of Power Trades University. Many times I get comments like, Jason Brown, I love your teaching. How can I get more of it? How can I work with you? So inside of Power Trades University, I've written courses like Foundations, which teaches you how to read stock charts, how to determine the best time to buy and the best time to sell. I'm also going to walk you through how to do fundamental research and the 3 most important profitable patterns and a whole lot more. Inside of Options Explained, which is my stock options course, I'm breaking down how to use calls and put options to supercharge your account in good markets and to protect your accounts in bad markets and potentially even make money from falling stocks. I'm also going to walk you through in my advanced options course how to use advanced strategies like strangles, iron condors, butterflies, all the advanced combinations to put together direction neutral strategies where it's possible to make money regardless if the stock goes up or down. You're also going to get access to me live 2 hours a week where I actually take what's taught in the courses and I apply it to the real market as I look for real trades with my real account and look to put real money to work looking for stocks and options to trade. You're also going to get access to our trading community of hundreds of other traders just like you, anywhere from beginners to advanced traders inside the community that are putting the information to work, sharing their charts, sharing their trades, getting feedback, learning, and growing their account every single day. So to get more information, just visit powertradesuniversity.com. And if I'm the coach for you and we have the courses for you, then we'd love to see you on the other side. Thanks for watching.